Welcome back. Adam Bobroff is a director of foreign exchange at Foremost Currency. Bob Parker is a senior advisor at Credit Suisse, and Kate Barker is still with us. So let's get into the foreign exchange conversation. Adam, what moved the euro down today? Was it the news about the subordinated debt in Ireland? Was it the weaker than expected PMIs? And if it was the Irish stuff, why hadn't the market already priced this in? The Irish have been moving in this direction, and certainly, to a certain extent, you can argue it was expected.
Yeah, although I think the Irish news obviously was worse than expected, worse than the forecast, which obviously had a move. The euro also had been advancing yesterday, probably off the back of a large dollar sell as well, so buying into the euro on the back of the dollar sell. And I think that was probably overcompensated for, so the euro was well and truly overbought.
I was obviously not being clear enough. I was talking about the Irish news relating to the fact that Anglo-Irish debt holders could be taking a hit. Did that feature in the conversation?
Yeah, absolutely. Yeah, absolutely. I think that definitely has an effect on it, of course. And of course, that's now sent market jitters through as to the strength of the euro and how they can look to recover now. And it puts us back on the agenda as to whether they can manage their way out of it.
Bob, the market's schizophrenic. We go from one day thinking that it's all about the dollar to the next day thinking it's all about the euro, and then we're back to the dollar, and then we're back to the euro. Which is the bigger problem?
The answer is both. We've got a situation in the United States where clearly the economy is very sluggish, despite actually a reasonably good leading economic indicator number today, up 0.3% for the month. But, you know, it's going to be very difficult to see how American growth can improve to, let's say, more than 2.5%. We've got a big risk period coming up in November when the American administration have to make a decision on whether they roll over the Bush tax cuts, and if they don't do that, and there's political logjam between the Democrats and the Republicans, I think that would be very dollar negative. Conversely, in Europe, we've still got this extreme divergence between still the very good economic growth numbers out of Germany, Northern Europe, economies closely correlated with Germany, and these ongoing budget, banking, and capital market stress in economies such as Ireland, Portugal, as we saw yesterday, where the debt auction, I guess the answer would be it went okay.
Yeah.
But at 400 basis points, you wouldn't say that auction was a great success.
No, they can still go to the market, so I guess that is probably still a success.
Well, they can go to the markets, but expensively. So, you know, I think the answer to your question is that this, you know, one day that everybody's going to be negative on the dollar, the next day they're going to be negative on the euro. That probably plays out for some time. I still think, however, the trend is one of dollar weakness over the balance of this year.
Kate, sterling's obviously caught up in all of this as well. Is your sense that the British economy still needs a weaker pound from here?
Well, I think the view expressed that there's so many weak things to say about most countries that it's hard to call where everybody's going is one thing. Does it still need a weaker pound? We had a very big adjustment on the pound. We are seeing some benefits of this. We've had some relatively strong still manufacturing surveys in the economy, even while other things are looking a bit weaker. I'm not sure that a weaker pound again would be very helpful, particularly given the worries we've got about inflation at the moment.
Adam, do we get a weaker pound though?
I think we probably will have a weaker pound in the short term, but I think it needs to look to run back up because a weaker pound really isn't going to be beneficial for us in the long run. It certainly appears to be the Bank of England's agenda to keep the pound down to help our exports. But I would probably argue that, to be fair, for a country that imports so much, why are we looking to the export side? That shouldn't really be the focus.
Is that right?
Well, I think we're looking to the export side because, you know, we're thinking about an economy where we're cutting one very big deficit. It will make that a heck of a lot easier if we start to see a trade surplus opening up, because it will bring less pressure into the consumer and corporate sectors, and actually I think is on the best chance that we have of getting growth back towards trend more quickly. So I would be pretty keen on getting exports up. I'm just not sure that a weaker pound again from here would be very helpful.
Is it an active policy of the Bank of England to? It's one of those things that's sort of a nice result, but not necessarily a direct result. What is the policy to target the currency sort of internally, do you think?
No, we certainly never had. Certainly at the time I was on the committee, we never had a policy to target the currency. We always, when we were setting our policy, did what we thought was right for the inflation prospect. That was absolutely what we stuck to. However, you will know from comments that were made at the time that the fall in sterling wasn't in some sense entirely unwelcome in helping us to sort out the imbalances in our economy.
Kate, it's been an absolute pleasure. Thank you very much indeed for stopping by and seeing us this afternoon. Kate Barker joining us. Adam, thank you very much indeed. Nice to see you as well.